Hey friends, hi. This is Sachin Nachnani welcoming you back to my YouTube channel. I hope you all had a pleasant weekend. My weekend was spent in analyzing HDFC Bank results in detail and also attending its virtual annual general meeting so that I can help you make an informed decision as to what you should be doing on Monday morning. Buy, hold, or sell HDFC Bank shares. As always, I will only show you the most important highlights of the results and, most importantly, present to you in a very simple and easy to understand manner. So, let's get started. But hey, wait, in my last video on Friday, while analyzing the option chain data, I had told you about two important events that you need to watch out. The first one was, of course, HDFC Bank results, which I will be analyzing right now in detail. But what was the second event? Check out the link above and watch the video before you trade on Monday morning. Let's have a look at some of the important highlights for the quarter. Net interest income, and that stands at over 15,600 crores, which is a growth of 18% on a YOY means year on year basis, and QOQ means quarter on quarter basis. Now, if you have a look at other income, that has gone down substantially. 18% over the last year and 32% over the previous quarter. Why is that so? In fact, the other income is lower by almost 2000 crores. Let me explain it to you. We all know that because of COVID 19, the entire economy has gone into a slowdown. The other income for any bank usually comprises of fee based income and commission based income, which they get by selling various third party products like mutual funds, insurance, some commission on forex. Now, because of the slowdown, there has been a decline in selling of all these products. There has also been a decrease in retail loans, and of course, the usage of credit and debit cards has also come down. Because of that, the other income is down substantially. But I believe this is only a one off and there is no reason to worry. So the total income is up by 8% on a YOY basis. The operating expenses is down by 3% on a YY, but they have managed to bring it down by 17% on a QOQ basis. Operating profit, short of 13,000 crores, is up by 15% over the previous year. Provision for NPAs, I have highlighted that in red. That is just shy of 3,900 crores. It is up by a whopping 49%. Why is that so? Well, we all know that HDFC Bank is a very conservative bank, and in this quarter also they have taken additional provisions, because of which the provision for NPS appears to be much higher. But I don't think there is any reason to be worried, and it is just the conservative approach of bank. Let me tell you that the provision coverage ratio for the bank now stands at 76%. This was at 72% in the previous quarter. This is among the highest in the industry. Now, profit before tax is just shy of 9,000 crores. Taxation, if you will see, it has come down by 23% on a year on year basis because of the change in corporate tax structure. The profit after tax is up by 20% over the previous year. In fact, market expectations for this was in the range of 6,300 to 6,500 crores, and the bank has achieved a profit number which is higher than market estimates. Well, if you saw the starting of the video, it said that this is real results analysis. Why is that so? Because I will be highlighting lot many things to you that you won't find in any other video on YouTube. Capital adequacy ratio. Now this shows how strong is the capital position of the bank. It stands at 18.9%. The regulatory requirement for it actually is 11.075%, and the bank has a much higher number than that. This goes to show the very strong capital position of the bank. Gross NPA 1.36%, net NPA 0.33%. Do you know that this number is the lowest in 14 quarters? Yes, it is the lowest in 3.5 years. ROA. What is ROA? ROA stands for return on assets, and that number is 0.44%. Now, this is a bit of a worry because this number has been gradually coming down and it is the lowest in 5 years. But still, it is a very respectable number as compared to many other banks in the country. NIM, net interest margin, that stands at 4.3%, which has been fairly stable over the last few quarters. And most important of all, moratorium. This is a number which you will not find in any video on YouTube. Moratorium stands at just 9%. This is the lowest for the entire banking sector in India. By the way, what is moratorium? Moratorium is just a temporary holiday in payment of your loan installments, or what you would call as EMI. This is a very, very big positive which the bank declared in its conference call. Let's also have a look at some other important parameters. The deposits have grown by almost 25% over the previous year, and even the advances have increased by nearly 21% over the previous year. These are very strong growth numbers in this environment. CASA. What is CASA? CASA stands for current account and savings account as a proportion of the total deposits. This stands at 40.1%, which is also one of the strongest numbers in the banking industry. I would also like bring to your attention another important factor, which is that Aditya Puri, who is the managing director and CEO, is set to retire in November this year once he turns 70 years of age. Now, who is going to replace him? The bank has sent a list of three candidates. Two of them are internal and one is an external candidate. In the conference call, Aditya Puri highlighted that it is most likely that an internal candidate will replace him, and that candidate has been in the bank for 25 years. If an internal candidate is selected, this will be good news for investors. Let's have a look at the fundamental target price first. The valuation has been worked out on the basis of various market estimates and my internal analysis. Now I am valuing HDFC Bank on the basis of its standalone numbers at a price of 1260 rupees. It has two important subsidiaries, which is HDB Financial, which is an NBFC, and HDFC Securities. Many of you must have traded. The total value of both these subsidiaries comes to around 50 rupees. Let me tell you that I have been conservative in valuing these subsidiaries, and especially if you look at most recent results of HDFC Securities, they were phenomenal. Yet I am valuing them at a total of only 50 rupees and giving them a discount which is called holding company discount of around 20%. So that is 10 rupees per share. So the total value of subsidiaries after holding company discount comes to just 40 rupees on a conservative basis. That gives you the target price of 1260 rupees plus 40 rupees, that is 1300 rupees per share. Now normally this is my target price for a year's time, but don't be surprised if you get the target price much before that. On Friday, the stock closed at just around 1100 rupees. Basis that, this gives you an upside potential of almost 18%. Continuing with fundamentals, let me show you some other important parameters for the bank from the website of BSE. So on Friday, the stock price closed up by almost 3.5% in anticipation of its results on Saturday. Its 52-week high is just over 1300 rupees and the 52-week low is 739 rupees. The market cap stands at over 6 lakh crores. This is the largest market cap for any bank in India. The face value is 1 rupees. The EPS for the last 12 months, TTM, that is trailing 12 months, is around 48 rupees. The PE, that is price earnings ratio, stands at 23. The price to book ratio stands at 3.5. Well, if you see both of them, especially the price to book ratio, this is at the higher end, but it has always been so in this range. ROE, that is return on equity, is over 15%. Even in my last video on Friday on option chain, I told you that HDFC Bank has been trading below its 200 days simple moving average for almost last 4 months. In all likelihood, after its results, I am of the view that tomorrow the stock can go up and most likely close above its 200-day moving average, which stands at around 1120 rupees. In my view, the results have been fairly strong. There may be one or two disappointments, but in totality, the results are better than expectations. And on the technical side, even yesterday, the stock has gone up on reasonably good volumes. In fact, if I could just draw a very simple line from the lows that you had seen around May end, you will see that the stock price has been following a linear uptrend and it has not moved below this particular line. In fact, even on Thursday, it took support from there and it went up further. I don't have any reasons to believe that it will break this support. If by any chance on Monday the stock price opens lower for whatever global factors, or if people have a different view, I would think it would be a good idea to go and buy the stock and hold it for a few weeks or few months. That will give you very decent returns. This is just my view. Please take an informed decision by consulting your financial advisor. If you have watched this video till here, let me show you something very interesting. This is the stock price return of HDFC Bank versus Sensex from a website called Markets Mojo. You can see that except for 1 week, 6 months, year to date, and 1 year time frame, the stock price has almost always outperformed the Sensex. So whether you look at 3 year basis, the stock gave returns of over 30%, while Sensex delivered only 15%. Look at 5 years, almost double. That is, you would have doubled your money in 5 years, whereas in Sensex you got only 30% returns. On a 10-year basis, over 439% as compared to only 106%. This has been the magic of compounding in HDFC Bank stock. Now you must be wondering, if this is what HDFC Bank has delivered, what about its peers? I'll show you that also. Look at this. The first line is of HDFC Bank, and then you have Kotak Bank, ICICI Bank, Axis Bank, Bandhan Bank, IndusInd, yes, and these are amongst the smaller banks. But if you look at the top four names, you will see that for the 6 month period, all of them without exception have delivered negative returns. Even on a year to date basis or even on a 1 year basis, all of them without exception have delivered negative returns. Once you move to 2 year basis, and then you can see that the longer the time frame, the better have been the returns of HDFC Bank. So on a 3 year basis, it has delivered over 30% returns, while only Kotak Bank has delivered more than that. In fact, Axis Bank has delivered minus 15% returns. On a 4 year basis, again highest returns at 80%. Axis Bank has again delivered negative returns. 5 year basis, look at that. And 10 year basis, only Kotak Bank has delivered more returns than HDFC Bank on a 10 year basis. But across all time frames, HDFC Bank usually tends to deliver higher returns than Sensex and of course most of the banks within the industry. Finally, let's have a look at the option chain. Though it is calls heavy, we need to see that the highest open interest is actually at 1100 levels of around 18 lakh shares. Now 1100 is just at the money option, and the stock price has closed also at just around 1100. If it opens gap up on Monday, which I think it will most probably, then there will be a strong short covering over here and the prices can go higher. I would think that the highest open interest tomorrow may get shifted to 1200 rupees. In fact, you can already see that the highest open interest addition on the call side was at 1200. In my view, looking at the charts and also at the option chain analysis, a price range of 1140 to 1160 is what you can look at over the next few weeks. Quite possible that it can happen in this month itself, because a lot of call additions had taken place over here, and I believe that all of them will have to cut their shorts and shift higher. On the put side also, there has been a reasonably good amount of open interest addition. That's it from my end. Thank you for watching this video. Do take good care of yourself and your family, and as I always say, stay home, stay safe, and gain knowledge.
Do like and share this video, subscribe to my channel and click the bell icon. You can reach out to me on Twitter, Insta, LinkedIn and of course YouTube.